Chapter 6. Is it worth it? 11 ways to think about money before you buy anything. How much does a cup of coffee cost? If you go to your local coffee shop, you might see that a 12-ounce cup of coffee is priced at $3 including tax, so your answer would probably be $3. Seems simple enough, so why am I asking this question? Because that $3 cup of coffee will actually cost you more, potentially a whole lot more, than you think. It's so easy to spend money nowadays that few people take the time to consider the true cost of each transaction. Swipe your credit card, tap your phone, or press a button and you are on your way. Unfortunately, the easier it is to spend money, the more money people spend, and that leads to consequences most people don't realize. Saving money is making money. Every purchase you make is a trade-off. Spend money on one thing. That's less money you can save or spend on something else. If you want to fast-track your financial freedom, you need to not only understand this concept but learn to consider every financial transaction you make in these terms. What are you actually getting in exchange for your money? Is it worth it? By spending money on X, will that leave less money for Y? If so, is X or Y more important? In other words, how much do things actually cost? When you spend money, you are not just paying for something with dollars. You're also paying with your time and the future potential value of those dollars. You're also adding to the amount of time it will take to hit your number. Everything you buy, you are trading for freedom. What's worth more to you, a few extra weeks of freedom or that new coat? If you want to make smarter decisions about money, you need to be mindful about spending it. And part of being mindful is considering the true cost of everything you buy, or don't buy, and using that to determine whether it's worth it or not. To do this, you need to start asking yourself questions other than how much money does this cost? In fact, there are 11 key questions you can ask yourself before making any spending decision that will help you figure this out. You don't need to ask yourself each question every time you make a purchase, but having them in the back of your mind will prove a useful check on spending money unnecessarily or mindlessly, and will also help you feel more confident about what you do spend your money on. When you learn to look at money this way, you'll discover that things are actually much more expensive than they appear, and you will end up spending less and saving more automatically. While 11 questions might sound like a lot to remember, after a little while, they'll become natural a part of your shopping routine. I've also created a simple list you can download and print or save to your phone at financialfreedombook.com/tools. Calculate and regularly monitor your real hourly rate. Before you can start asking these questions, you need to figure out how much money you are actually making. Specifically, how much money do you actually make per hour? This is known as your real hourly rate. One of the goals of this book is to help you make as much money in as little time as possible and eventually have enough passive income so that you no longer have to trade your time for money at all. The higher your real hourly rate, the more money you are making for your time. Calculating your real hourly rate is essential because it allows you to both see, in real numbers, just how much time you are trading for your money and weigh this information when considering how much something actually costs and whether it's worth buying. Your pay stub may show that you are getting paid $20 per hour after taxes, but that is only for the time you are sitting at your desk or working at your job. It doesn't account for all of the extra time you spend doing things because of your job but outside of it. You spend time commuting, getting ready for the workday, shopping for work clothes, traveling on work trips, distressing after work or on the weekends, and probably other things. You're not getting paid for this time even though you would probably spend it differently if you didn't have your job. Your 9-to-5 job takes a lot more of your time in your life than you realize. When you add all of this time up and include it in your real hourly rate calculation, you will see that you make a lot less money than what your employer says you do. As you make more money in your full-time job and launch side hustles, your real hourly rate will change. So, as in the case of your net worth, it's important to calculate and monitor regularly. I recommend calculating your real hourly rate for each of your income streams individually, and in aggregate ideally once a quarter, or at the very least, once a year. When you know your real hourly rate, you can better evaluate new job and income opportunities as you work on increasing your salary. While it can be difficult to calculate your exact real hourly rate, since getting ready, commuting, shopping for work clothes, traveling on work trips, detoxing, and so forth will inevitably vary from week to week, a solid estimate is good enough for our purposes. Start by figuring out your base hourly rate, i.e., the amount of money your company says it is paying you for each hour you work. If you are currently being paid by the hour, this is super easy to do, and you probably already know it. If you're a salaried employee, your pay stub may show an hourly rate, but this is usually calculated based on a 35 to 40-hour work week, and it's very possible that you work more than this. If this is the case, divide your annual per-tax salary by the number of hours you work in a year. Simply figure out the average number of hours you work per week and multiply it by the number of weeks you work. If you are a salaried employee, the more hours you work, the lower your real hourly rate. So if you work 50 hours per week for 50 weeks per year, then you are working 2,500 hours per year. That's a lot of premium time. If you make $50,000 a year, that amounts to a base hourly rate of $20. If you don't know how many hours you work each week, it might be helpful to keep track of your hours for a few weeks and then figure out an average. Even if you spend an hour each day surfing the internet at your desk because you don't have enough work to keep you busy, count that hour as work because your job is preventing you from using that time for other things. Now that you have your base hourly rate, you can calculate your real hourly rate. Think about all the time you spend each week commuting to work, traveling for work, buying clothes for work, attending events, distressing from work, or anything else you spend your time on that you wouldn't have to do if it wasn't for your job. Remember that Americans on average spend roughly 53 minutes commuting every day. That means they spend about 220 hours each year commuting if they work 50 weeks per year. That's equal to 27.5 additional 8-hour working days per year. And they're not getting paid for a minute of it. And if you travel on trips for your work, those hours really add up. Just a few overnight trips to conferences or clients can add hundreds of hours a year. When you are at that sales conference in St. Louis, you can't be somewhere doing something else. So a regular 8 or 10-hour workday becomes a 16+ hour workday with travel. A simple 3-day work trip might end up costing you 48 hours, instead of 24 if you were at home. If you travel all the time for work, you might be really blown away by how low your real hourly rate actually is. I did this calculation for one of my friends who makes $250,000 a year as a business consultant, but he's traveling most of the year. Because of all the travel and hours he puts in, his real hourly rate after tax was about $35 per hour. He was so blown away by how much time he was actually trading for money that he changed jobs a few months later. Use the table below to write down how much time per week you spend working and doing things related to work. Then use this information to calculate your pre-tax and after-tax real hourly rates by dividing your salary by the total number of hours you spend as a result of your job. Note that you can also easily find your tax rate at taxfoundation.org. I've also built an online calculator you can use to calculate your real hourly rate at financialfreedombook.com/tools. Yikes, that's a lot less than the $20 base rate I assumed I was making based on the amount of time I spent at work. Don't worry if your real hourly rate is less than you realized. In a later chapter, we'll explore how to maximize your real hourly rate. But for now, I just want you to know what it is so you can better determine the true cost of what you're spending your money on. Effective hourly rate, salary, total hours per year. Now that you have your real hourly rate, you can start asking yourself the 11 questions that will help you evaluate the true cost of anything. Each one is designed to help you answer the question at the heart of every purchase you consider making. Is it worth it? The answer may surprise you. Question 1. How happy will this purchase make me? When most people want to buy something, they look at the dollar price first and then ask themselves if they want to buy it. The cheaper it is, the easier the decision often is. This cup of coffee costs $3. Do I want to spend $3 on this cup of coffee? People in the United States consume 400 million cups of coffee every day. It's a relatively cheap and easy thing to buy without being mindful of it. But the next time you want to buy something, before you consider the price or whether you can afford it or all of the other questions we will get into later in this chapter, start by asking yourself a more personal question. How much value will this bring to my life? How happy will it make me today? How happy will it make me tomorrow and next month? Answering this question gets easier over time as you realize that many things you think will make you happy won't, or the things that once made you happy no longer do. This is a money mastery concept because it forces you to make choices based on something deeper. Only you know what truly makes you happy and if it's worth spending money on. You need to think about your short and long-term happiness, since next month you might regret buying something that brings you joy today. Answering this question for a cup of coffee is pretty easy. If you love good coffee and having a high-quality cup first thing in the morning sets the right tone for your day, then you'll probably determine that it's worth it to spend $25 on a bag of beans or $3 on a small cup at your local cafe. So many personal finance books and money experts recommend cutting back on your daily coffee or daily wine or whatever relatively small indulgences you tend to buy during the week. The idea is that these small purchases add up and that this money would be put to better use if saved or invested for later. But those small things often make you happy and bring joy to your life and are therefore much more valuable than they appear. Your best friend may not want to spend $25 on a weekly manicure, but if doing so makes you feel good and confident, and you use the time at the nail salon to chill out after a long day at the office, then by all means go for it. Don't give up what you enjoy just to save a few bucks. Trust me, when it comes to the bigger picture, that small moment of happiness is likely more valuable than the extra money you are saving. On the other hand, if you're bored at the airport and start to get a little thirsty, you can use this question to determine how much you really want that organic cold-pressed green juice. You may decide that a free cup of water will do the trick just fine. By the time you find out the green juice costs $14 a bottle, you've already made up your mind not to buy it. But will this make me happy? Might be more challenging for larger purchases like a nice new suit, a car, or even a house. People often spend the most money on big houses, expensive cars, or fancy trips because they feel like it's what they're supposed to do, not because they really want them or the items will truly make them happy. If you love to drive and have a passion for cool cars, then perhaps spending extra money on a high-performance convertible might be worth it. Then again, perhaps you'll determine that you'd be happier spending less on a car and using the money you saved on an annual trip to Europe. In the end, you may end up spending the same amount of money, but one decision will likely bring you much more joy than the other. If you're unsure, sleep on it or make a personal rule that you won't buy something whenever you are unsure of its value. Buy what you want, what gives you joy, and say no to anything that is meh or maybe or I don't know. So the next time you are walking by the coffee shop or the salon or the wine bar or searching for properties online, ask yourself, how happy will this make me, and is it worth the money? Or just wait a few days, weeks, or even months and ask yourself the same question to see if you still want to buy it. A popular strategy is to always wait 30 days before any purchase over a set dollar amount, say $100, or only checking out from your online shopping cart once a month. Over time, this level of mindfulness will help you more easily identify the things worth spending money on and maximize your enjoyment per dollar. Question 2. How much money do I have to make to afford this? Now let's get down to some numbers. When you buy something, you pay for it in after-tax dollars, which means you actually have to make more than the price listed in order to afford it. For example, if you are in the 30% effective tax bracket, that means that 1.5 of the 5 days you work in a week is going just to pay your taxes. It also means that every $1 you make is actually worth only 70 cents in purchasing power, depending on the federal tax bracket you are in, as well as how much you pay in Social Security and state and local income taxes. The true cost of that $3 cup of coffee is without a doubt more expensive. You likely have to earn at least 20 to 40% more than the list price of whatever you buy. So next time you want to calculate the per-tax cost of something, use the formula below. Divided by equals the per-tax cost of the item. Using coffee as an example again, let's say you pay 25% of your income in taxes. So, $3 divided by equals $4. In other words, you have to earn $4 in order to afford a $3 cup of coffee. While $1 isn't a lot of money, when you analyze bigger purchases, the difference can be massive. For example, if you pay 25% of your income in taxes and want to buy a $40,000 car, you would need to make approximately $53,333 in per-tax income to afford it. That's an extra $13,333. A simple way to look at it is, however much you pay in taxes, you'll have to earn that much more to afford something. So if you pay 15% in taxes, anything you buy is actually 15% more expensive than the list price. If you want to get technical, it's actually more than that because your income taxes don't include the money you need to pay for Social Security and Medicare taxes, which as of this writing adds at least another 7.5 to 15% to your tax bracket. This is just one of the many reasons tax optimization is important, because it makes every $1 you make worth as much as possible. Just reducing your taxes by 5% through proper deductions and investing strategies is like saving 2 hours of your time each week, or over 100 hours a year. It's helpful to also think about money in units of time, which brings us to the next question. Question 3. How many hours of my life am I trading to afford this? As we've already discussed, money is infinite, but time is not. Anytime you are getting paid to work, you are trading time from your life for money. The average life expectancy in the United States is roughly 79, which means the average American lives for 692,040 hours. Since you spend at least a third of your life sleeping, that leaves about 461,360 waking hours in the average American's life. If you are 20 years old and live to 79, you have about 344,560 waking hours left. If you are 30 and live to 79, you have about 286,160 waking hours left. If you are 50, you have about 169,360 waking hours left. And so on. The next time you go to buy something, ask yourself, how much of my life am I trading for it? How many hours do I have to work to afford that $3 cup of coffee? The cup of coffee is a pretty small example, and this calculation tends to be more psychologically meaningful for larger purchases, but it works for the coffee, too. Using the after-tax real hourly rate you calculated earlier in the chapter, let's calculate how much of your life you would have to trade for a $3 cup of coffee, divided by equals number of hours traded. For the purpose of this example, let's use my after-tax hourly rate of $10.79 that I calculated earlier in the chapter. $3 divided by $10.79 per hour equals 0.278. Now, 0.278 of an hour is 16.68 minutes. So I'd have to work about 16 minutes and 40 seconds for this coffee. That's not so bad. I think most caffeine junkies would be willing to work 16 minutes for a good cup of coffee. But what about more expensive purchases? What if I wanted to buy a new car that cost $40,000? $40,000 divided by $10.79 per hour equals 3,707 hours. That's an insane amount of time. That's 74 50-hour work weeks, about a year and a half of working just to buy a new car. Understand that unless what you are buying can appreciate, like real estate, then you will have to save more or work longer to reach financial independence if you choose to buy it. Another way to think about it is, if you don't buy that $40,000 car, depending on your number, you might be able to retire up to 5 years sooner. Is that new car worth 5 years of your life? At the end of the day, it might be worth it to you to buy the car if it makes you happy and you can answer yes to the next question. Question 4. Can I afford it? This seems like an obvious question, but so many people live beyond their means and buy things they can't actually afford that it's important to always ask it, especially when you are trying to decide on a big purchase. Can you afford a $3 cup of coffee? Probably. But what about that $300,000 house? That all depends on your finances and net worth from the previous chapters. It also depends on how much money you have already saved. When you look at the median net worth of Americans and how much the average family spends each year, it's easy to see that in most situations the answer to the question, can I afford it, should be no. In 2016, the average American family's before-tax income was $74,664, and their annual expenditures were $57,311. If we calculate a roughly 20% reduction in net income after taxes, that family is left with about $59,731, which means they are barely making more than they spend. Cutting it so close is why the average American household has $15,654 in credit card debt, $27,669 in auto loan debt, and $46,597 in student loan debt. As a general rule, you should never spend more than 2 to 3% of your total net worth on any single purchase like a vacation or a car. If you are just starting out and have a negative net worth, you are going to need to make some steep trade-offs to get ahead financially, like trying to avoid car ownership if you can or buying the cheapest, most reliable used car that you can find. Of course, if having a car is necessary for your job, then you can spend more, but I encourage you to spend as little as possible until your net worth is positive. Try to pay cash for your car. In most cities you can find a reliable used car for under $2,000 so you don't have to pay interest on an auto loan. This might mean putting off a vacation for a while. But remember, the impact of your choice today means more time and more freedom tomorrow. Buying a home is an exception, since unlike most cars, which depreciate, real estate typically appreciates, making it a sound investment. It can make sense to take out a mortgage from a bank to buy a home. But you should take out only as much mortgage as you need, not what the banks are willing to give you. Banks are often willing to lend you a lot more money than you should be borrowing from them because they make money on your interest payments. Unless you are house hacking and strategically using the bank and renter's money to cover your mortgage, then you should only ever borrow the minimum that you need. I will explain in detail how to assess buying real estate in Chapter 11. For now, a quick rule of thumb is that you should spend only 30% or less of your after-tax annual income on your mortgage or rent each year. Some financial advisors will say you can spend up to 40% of your income on housing expenses, but I think that's too much. Housing is most people's biggest expense, so you should minimize it as much as possible so you have more money to invest. Question 5. How do prices compare in terms of percentages? That $1 price difference between a $3 and a $4 cup of coffee might not seem like much, but it's actually a 25% difference. By looking at the percentage difference, it is easier to assess the actual difference between $2 amounts. The next time you're shopping and want to compare multiple products or multiple versions of the same product, Consider the difference in price as a percentage rather than in terms of dollars. For example, the store brand of coffee might be $9 a bag and the name brand $12 a bag. $3 is not that great a difference, but in this case, it amounts to a 33% difference, which is huge. In fact, buying the store brand, in that case, is like getting a 33% return on your money. That's insane. You can't get that kind of return anywhere else. When you focus on the percentage difference between two prices, it's easier to make a value judgment on whether it's worth paying more for one product over another. For me personally, a product needs to be a lot better for me to pay 33% more for it. But if I determine it's worth it, then at least I know I made my decision using all the information I had at my disposal. It might not be worth it to pay 33% more for what is essentially the same coffee, but it may be worth it for me to pay 33%, or even 50% or 75% more for coffee that is obviously better tasting. The easiest way to make money is not to spend it, and you can use this same strategy when trying to save money. For example, how much more does it cost to eat out than it would if you were to prepare the same meal at home? There is a steakhouse in Chicago that I really love. The vibe is good and the apps and drinks are great, but I calculated that the $60 bone and ribeye steak costs almost 400% more than if I were to buy the same cut of meat for $15 at the grocery store and prepare it at home. That's a huge premium, and since I did that calculation, I've definitely been making more steaks at home. It might be worth it to eat out for a special occasion, since I can't recreate the entire restaurant experience at home. But if I just want a decent steak, a 400% markup is hard to, pardon the pun, swallow. Question 6. Can I get it for less or trade for it? This is a simple question that must be considered with any purchase. Of course, getting something for free is always best, and you can find a lot of things for free if you are patient and willing to seek them out. I'm a big fan of FreeCycle, a website that lists free stuff and has millions of users. You can find so many things on there if you make it part of your regular browsing. A while ago I found a $300 juicer that a couple never used, a $500 exercise bike, and an amazing desk chair. Also, don't be afraid to barter for stuff. If you have something you don't need anymore, hunt down someone who is willing to trade you for it. Second, if you can't find something for free, you can probably purchase it used for significantly less than you can new. Literally almost everything depreciates in value after it's been purchased, so you can get significant savings on anything from cars to clothes to computers to books to furniture when you buy used instead of new. I'm not saying you can't buy new things. Your money-time trade-off is up to you. I'm just urging you to consider whether you can get the same value for less by buying used. Personally, I rarely find new goods to be worth the premium. The new $100 shoes I'm wearing I bought for $19 on eBay and saved almost 80% with just a few clicks. Of course, this doesn't work for food, but you can still seek out cheaper options. Don't spend hours trying to save a few bucks, but investing the time to find the cheapest grocery store or farmer's market in your neighborhood will pay big dividends over time. Another option to consider is if you can trade or barter for it instead. You might be able to let your friends use your car in exchange for their taking you out to eat once a week. While this is common when we are in college, once we get it out into the real world, we tend to forget that trading and bartering is possible and can be a lot cheaper if we seek it out. I'm always looking to exchange my web design skills for free stuff and have gotten everything from free furniture to dog walks to haircuts to real estate advice and many free meals all by bartering. While I've never done it, I've also met many people who barter for free rent and bank their income, which we'll dive into later in the book. Question 7. How much am I spending on convenience? How much would it cost you to make your daily cup of coffee at home? We all end up paying a really high premium for convenience when we purchase things that include some type of service. The markup on coffee, for example, is nuts, as is the markup on delivery food. Let's say a 1-pound bag of your favorite coffee costs $12. That's about 75 cents an ounce. It takes approximately 0.75 ounce of beans to make an average 12-ounce cup of coffee, so it costs about 56 cents to brew a cup of coffee at home versus the $3 you'd spend out. That's a convenience charge of 435.71%. You can do these calculations for food preparation pretty easily using a formula similar to the one above. But don't forget to factor in the extra time you spend making a meal for yourself, including the cost of shopping for ingredients, preparing the meal, and cleaning up. You also need to consider if you can actually make the meal yourself, which won't be quantifiable but will at least help you figure out the value of convenience. It might not be worth it to pay someone $15 to make you a grilled cheese sandwich or a Caesar salad, but it might be worth it to pay someone $50 to make you a 5-star meal that would take you hours to prepare at home. But like everything else, if you love cooking, then it might be worth doing it yourself even if it ends up being a bigger time trade-off. And it also might be healthier. Or for services like house cleaning or yard work. If your real hourly rate is $40, then it makes sense to pay your neighbor to mow your lawn for $20 an hour or a cleaning company to clean your house for 4 hours for $120. But if it costs $200 to clean your house for 4 hours, then it would be cheaper for you to do it yourself. Of course, you might determine it's worth the premium to buy back that 4 hours so you can use it for other, more enjoyable things. It's all in being mindful of the trade-offs and realizing how much you are paying for the price of convenience. I encourage you to start calculating your own convenience costs for items you consume regularly. I used to spend $3 on a cup of quality coffee every day until I realized I could get the same benefit for a lot less money if I made the same coffee at home. However, I will still buy a $6 cup of Stumptown from time to time when I travel because I know it will make me happy. I'm also always down to order sushi from a restaurant, since I can't make it at home. Question 8. How much would this cost me each year or for the rest of my life? No matter how small, recurring expenses add up over time, so it's useful to calculate the impact recurring expenses could have each year over a longer period of years, and for some expenses, for the rest of your life. Also, remember that every recurring expense you have over your lifetime is going to increase your number. How much does the coffee cost you if you buy it every day this year? Or how much does that monthly gym membership cost annually? A $3 daily cup of coffee adds up to $1,095 a year, or $10,950 over 10 years. Not bad for having a cup of coffee every day for 10 years. I'd pay it, but maybe after seeing that total, you wouldn't. A $75 monthly gym membership is $900 a year, or at least $9,000 over the next 10 years. If you just go to ride the bike or use the elliptical at that price, it might make more sense to build a gym in and put some equipment in your basement. Your $14.99 a month HBO Now subscription is $179.88 a year, and so on. After analyzing my expenses, I learned that my weekly Chipotle habit was costing me over $820 a year. That's a lot of money, but when I did my own convenience calculation, I determined it was actually more expensive for me to shop for and make my own lunch. At the same time, it cost me $891 more to buy coffee out than it did to make it at home. When I first did this calculation, my real hourly rate was close to $10, so I made the decision to not trade 89 hours of my life for a to-go coffee habit. But as my income and real hourly rate increased, it's now closer to 20 hours of my life per year I trade for my coffee habit, which is worth it to me. Question 9. What is the per-use cost of this item? This example doesn't work with a cup of coffee, so I'm going to go a little rogue here to illustrate this useful question. If you buy something that you are going to use frequently, then it's worth estimating the cost of the item on either a per-use basis or based on how frequently you use it. For example, you might really love grilling and you're deciding between two different grills, one that is $500 and one that is $1,000. In addition to comparing the dollar price, you can also consider how often you will use the grill each year and how many years you will use the grill. If you use the grill 2 times a week, that's 104 times each year. If you estimate the grill will last you 10 years, like your old one did, then using it 104 times a year for 10 years equals 1,040 approximate uses. Then you can take this number and divide it into the price of the 2 grills you are evaluating to get the expected per use or per year amount. So $500 divided by 1,040 uses equals 48 cents per use, or $500 divided by 10 years equals $50 per year. If you do the same calculation with the $1,000 grill, then $1,000 divided by 1,040 uses equals 96 cents per use, or $1,000 divided by 10 years equals $100 per year. While the $1,000 grill might feel a lot more expensive than the $500 grill, looking at the difference over 1,040 uses, you will end up paying about 48 cents more each time to use a nicer grill, or about $50 more per year. It's up to you to decide then whether the $50 extra per year is worth it for the nicer grill. If the nicer grill is easier to use, cooks faster, or allows you to cook for more people, it might be an easy decision. This works especially well when evaluating large purchases like cars, boats, and specialty clothing items that you might wear only a few times. Question 10. How much will this money be worth in the future? If you've made it this far and have started thinking about money differently, you are now my forever homie. These questions changed my life. But there's still one more question you should consider. Ready to geek out? This is my favorite calculation. Every dollar you spend could have been invested if you hadn't made that purchase, so you should always try to analyze what the future value of your money could be if you invested it instead. Let's look at the future value of the money from the coffee example to determine what the money I spend on something today will be worth in 5, 10, and 30 plus years. For an easy way to measure this for any purchase, check out the future value calculator at financialfreedombook.com/tools. Using a 7% annual growth rate, the $3 we spend on a cup of coffee today would be worth $4.21 in 5 years, $5.90 in 10 years, and $22.84 in 30 years. Those numbers aren't all that impressive, but let's look at the annual cost of that coffee over the same time periods. That $1,095 you spend every year would be worth $8,123.26 after 5 years, $18,086.70 after 10 years, and $120,859.30 after 30 years. What? All those coffee haters out there could be banking mad money. When you buy anything today, you are sacrificing the opportunity to save and grow that money. Thus, with every purchase, you increase the amount of time you need to hit your number. And since money decreases in value over time thanks to inflation, you could end up needing to save more money the longer you wait. This is the negative net effect of spending money versus investing it. Just as every dollar you invest helps you get closer to your number and reduces the amount of time required to hit it, any dollar you spend means you will have to work more and it will take you more time to reach financial freedom. You are losing out when you buy something not just because you spent the money, but because you missed the opportunity for it to grow. If you save $40,000 by not buying that new car, that allows you to invest the $40,000 instead. Instead of $40,000 on your net worth, the impact is plus $40,000 times 7% per year for the next 10, 20, or 30 plus years. With your plus $40,000 investment from not buying the new car doubling every 10 years, you'd have $80,000 in 10 years, $160,000 in 20 years, and $320,000 in 30 years. So every time you don't spend money and invest it instead, you will be maximizing the net impact of the money. By asking yourself, is this money worth more to me today or in the future? You will find yourself much more willing to invest money instead of spending it. Which brings us to the most important question of all. Question 11. How much time is this buying me in the future? When I was deep in my own financial independence journey, I calculated that for every $25 I saved, I was buying 1 day of freedom in the future. So when I saved $100 in a day, I knew I was buying 4 days of freedom. This made it easier for me to say yes or no when considering a purchase, because I was able to quantify it in units of future time, which represent freedom. Thanks to compounding, the younger you are, the less money you need to buy a day, a week, or a year of freedom. Since the math is a little too difficult to do by hand, I've created a simple online tool that you can use to calculate. Based on your current investment balance, expected investment growth rate, and the average expected inflation rate, how much money you need to buy 1 day or year of freedom. You can also use it to determine how many days any amount of money you are investing will buy you in the future. Check out the Financial Freedom Calculator at financialfreedombook.com/tools. Conclusion. While this may seem like a lot to take in, these questions become easier to answer as you practice them, and over time, I guarantee you will start making better financial decisions. Trust me on this. This psychological stuff is powerful. Remember, it all comes back to trade-offs. If that cup of $3 coffee makes you happy and you realize that you are trading 16 minutes of your life for it but determine that's a trade-off worth making, then by all means, drink up. But as you apply these questions to annual recurring expenses or bigger purchases, you'll start to question the value of every dollar you spend. Again, this is why the best way to save money is simply not to spend. It's up to you to decide whether it's worth it. Those trade-offs can add up to a lifetime of freedom. Download a card of these steps you can print out and keep in your wallet or on your phone at financialfreedombook.com/tools. Recap. 1. Calculate your real hourly rate, which is how much money you are actually making for an hour of your life after taking out time for getting ready, commuting, traveling for work, distressing from work, or anything else you spend your time on that you wouldn't have to do if it wasn't for your job. 2. Ask yourself these 11 questions before buying anything. 1. How happy will this purchase make me? 3. How much money do I have to make to afford this? 4. How many hours of my life am I trading to afford this? 5. Can I afford it? 6. How do prices compare in terms of percentages? 6. Can I get it for less or trade for it? 7. How much am I spending on convenience? 8. How much would this cost me each year or for the rest of my life? 9. What is the per-use cost of this item? 10. How much will this money be worth in the future? 11. How much time is this buying me in the future?